I was heavily involved when long-term capital management, the giant hedge fund, went under. That brought down about 20 hedge funds at the time. And it was so catastrophic that the Federal Reserve had to bail out the banking system. The outcome then was anger, despair, hatred, hedge funds, leverage, opaque vehicles. Nobody should be allowed to invest. How dare you put your pensioners' money into it? What happened was actually regulation and the size of assets in hedge funds tripled in 4 years. Then Bernie Madoff came.
Bitcoin has long been associated with high volatility, with digital currency making attempts to become a mainstream financial asset. Despite the volatility, the asset has recorded significant returns over the years, dwarfing traditional finance products. In particular, over the last decade, Bitcoin has emerged as the best-performing asset in 7 out of those 10 years. Interestingly, for 3 years, Bitcoin failed to emerge top. The asset was the worst-performing. Data shared by investment strategist Raoul indicates. Former Goldman Sachs executive Raoul says gold, stocks, and Ether are all showing patterns signaling big rallies are coming. The macro guru tells his 991,200 Twitter followers that the precious metal is forming an inverse head and shoulders and S chart, indicating an imminent upward swing. Powell also says Ether may break out of a falling wedge pattern and find a higher support level at $1,500. Lastly, Powell gives a review of Bitcoin's historical performance, saying it is the best-performing asset in the past decade. Interesting to see that in the last 10 years, Bitcoin has been the best-performing asset in 7 out of those 10 years. In the years it wasn't the best-performing, it was the worst-performing. However, since 2013, Bitcoin is up 114,000%, NDX plus 392%, SPX, Standard & Poor's 500 Index, plus 203%, Fed balance sheet plus 201%. Bitcoin's lowest returns have coincided with the asset's phases of operating in a bear market, such as in 2014 when the Bloomberg Bitcoin Galaxy Index recorded a 57.51% performance, while in 2018 the value stood at 74.28%. The crypto market has come a long way since its inception, and it has constantly been evolving. The need for regulation intensifies as the crypto market becomes vaster and gains tremendous traction. Among many applicants on the list for implementing the regulations in the U.S. is the Commodity Futures Trading Commission. In another tweet, Powell shared an idea about the state of the financial market and the role the crypto world will play. I can't help but think that the crypto world will do what the FTX world has not managed, to split into 2 trading blocks. Asia and ROW controlled by Binance, and US probably controlled by Coinbase. Don't think this is likely a coincidence either. EU is still a swing factor for now. Let us get back to the video and listen to what Powell has to say. In the meantime, ensure to like the video, subscribe, and drop your comments below.
And I think the crypto markets are being bifurcated into 2 trading zones, much like they want with the currency markets overall. They want a Chinese block and a Western block. And I feel like that is the battle that's playing out in front of our eyes, which is Binance and potentially Coinbase and a few others on the Western side. But, you know, if you're a Filipino or you're a Brazilian or whatever, you use Binance. I mean, there's just nobody else to go to. And so they have a huge part of that. I think, and we've seen already with Tether, that even the Chinese have said, oh, people were using Tether for money laundering. Everybody knows that capital flight in China leads to money coming out. And I think they've been using hedge funds as well. Something I don't really want to talk about, but I think that some of the largest hedge funds have been involved in that too. And I think Binance is involved in that. I think it's a way of taking money out of the Chinese system for the leadership and others, and also having control of the digital economy as it develops. And I think they know that. So, you know, I think, so whether it goes bust or not, different, because we don't know who that backer is. If it's a sovereign state, it probably won't go bust. But you're giving your money to a sovereign state. It's dangerous, and we don't need it. I mean, this is what I don't get. Sure, I've got a Binance account. I can trade, just take my tokens off. It's all over and done with in 5 minutes. 5-minute exposure. But why do people... I mean, I got into this space because of what happened in 2012 in Europe when the banking system went under, in 2008, that we can self-custody assets. So that's the killer app of crypto. And yet everyone just goes, la, 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 I can't hear you. I'm just going to leave my stuff on Binance because I can't be bothered to figure out how to plug in a ledger. I mean, really, guys? It's inexcusable. Use them for trading, like an exchange. You don't store your futures on the CME, they get cleared and custodied in a regulated entity. Well, we can do it ourselves. So you can go there, trade, do what you want, use any counterpart you want, and then take it off. Simple. Again, I've kind of lived through this a lot, whether it's in crypto and traditional markets. I was heavily involved when long-term capital management, the giant hedge fund, went under. That brought down about 20 hedge funds at the time. And it was so catastrophic that the Federal Reserve had to bail out the banking system. The outcome then was anger, despair, hatred, hedge funds, leverage, opaque vehicles. Nobody should be allowed to invest. How dare you put your pensioners' money into it? What happened was actually regulation and the size of assets in hedge funds tripled in 4 years. Then Bernie Madoff came. It's a scam. It's a Ponzi. It's all opaque. It's a terrible business. Nobody should put their pensioners' money into it. What happened? Regulation. It 5x'd after that in size to $3 trillion. So actually, the regulation is a good thing. I know a lot of people in this space don't like regulation, but you can't have it both ways. You cannot want to exist on-ramping and off-ramping from a fiat world and not have regulation. It's as simple as that. And so when that comes, which it will, it's just a matter of who wins the fight between the CEC and the CFTC. There will be an answer, and that will give everybody comfort in the space to get in.
iTrust Capital is America's #1 crypto IRA platform. It allows users to buy and sell cryptocurrencies from their individual retirement accounts with low fees, tax-advantaged crypto accounts, and great customer support. iTrust Capital has gotten even bigger, with over $6 billion in transactions and more than 175,000 accounts created. All thanks to its wide range of exciting features, especially the new digital asset staking feature. Users can now stake Polkadot on iTrust Capital for up to 9.5% APY. This is a staking offer from a U.S.-regulated network and is completely different from offers from lending platforms like BlockFi and Celsius. Such platforms earn yield via lending rates, a venture that has proven risky and unstable. With iTrust Capital, the yield comes from staking rewards, a risk-averse way to earn a yield on your digital assets holdings. In less than 2 weeks after the beta launch, thousands of clients have staked 25% of the Polkadot on the platform, and it will only get bigger. iTrust Capital currently offers around 30 cryptocurrencies, including Bitcoin, Ether, and Cardano. The retirement account platform plans to add staking support for more cryptocurrencies in the coming months. This is a wholesome offer you do not want to miss, especially while preparing for retirement. It is a long-term investment that can help you achieve your retirement goals much faster while enjoying the vastness of the cryptocurrency industry. Please click the link in the description box to register on iTrust Capital and enjoy all its exciting features. Thanks.
So I don't think it changes the adoption curve. It's no different than Mt. Gox going, which was actually bigger because it was a bigger part of the market. It would be like the equivalent of FTX and Binance going under at the same time. Now that may be happening if Mike's right.
Maybe
but,
Coinbase. Maybe Coinbase.
And maybe Coinbase, right? It was everything. Right. I was lucky. I was with Itbit, which Chad Cascarilla, who founded Paxos, had started, and I was out of the whole thing, luckily. But we saw it with Bitfinex as well. They were huge when they went, insolvent.
According to Powell, market crashes and collapse happens over and over again, but they won't and can't stop crypto from flourishing, and that is something most people do not understand. He went further to elaborate on it, as we would see as we continue watching. When asked about what he is excited about, Raoul Powell points out very interesting developments in the markets, from potential Bitcoin rally to Ether staking and NFTs. He also mentions that Ticketmaster has issued a hopping 10 million NFTs with Starbucks at the forefront of NFT adoption, and this is just barely the beginning.
So we've seen it a number of times before. It doesn't stop the space. It's usually just when the tide goes out, and that's usually when monetary liquidity is withdrawing from the system, you see who's swimming naked. And it's always, listen, it's a really simple thing, Scott. You do not ever build a business of leverage on an asset or of a collateral that is 100% volatility. That's fucking insanity, because it will, probabilistically speaking, force you into insolvency, guaranteed. Now, that's why real estate has leverage, because it's very non-volatile. It's maybe a 0.5% volatility asset or a 1% volatility asset. This is 100 times more volatile, and idiots think every time, you know what we need to do is build leverage on a 100 volatile asset and then wonder why they blow up and go, really, guys? It's pretty obvious. So anyway, that's my learnings, that regulation will stop the leverage in certain ways, or reduce the leverage for in line with the underlying volatility, and sort out properly client segregation of funds. Cyclicality of crypto is driven by the monetary cycle. And then we've got the long-term trend of adoption. And when those two meet are the magic periods in time where the risk reward goes exponential, right? And this is why crypto looks like no other asset. There was a great thing that Bloomberg put up recently, which is over the last 10 years, 7 of the 10 years, Bitcoin's been the best performing asset in the world as a proxy for the whole of crypto space. In the 3 years that it wasn't, it was the worst. And, you know, it's buying the worst when you get this is an incredibly exciting opportunity, and you don't get this kind of risk reward. So I really like it from an investment point of view. I think at a broader level, there's a lot of stuff going on in the background that is really interesting. I think ETH staking is still not realized what that means for the lending industry, and be able to build better quality DeFi product with understandable risks, because you've got a benchmark yield for the industry. And I think it's a hugely important thing. People don't know it, but you know, that by the next cycle, by 3 or 4 years time, everyone's going to be familiar with that. How people can start pricing things of ETH yield plus. So then, you know, oh, you know, Solana yields trading more expensively. Why? Because there's more risk in the ecosystem, whatever it is, right? I think that's a very big deal. What products, what structured products and stuff that come out of that, that's interesting. I've spent a deepening amount of time into the NFT space, and just that nexus of music, art, technologists, finance people, just culture all coming together. I don't think it's barely started. It's a magic moment in time. There's something really interesting going on, and obviously it's spinning out into brands using NFTs, whether it's Porsche, whether it's, you know, Nike, whether it's Adidas, whether it's others. What are they doing? How are they building community? Understanding community as a new business model. This is a scalable, massive consumer application that is happening in front of our eyes, and Starbucks is right at the forefront of that, as are many other brands. Ticketmaster, and then this one in a lot. Ticketmaster has issued 10 million NFTs. Nobody would have thought they would be the leader. They are, right? So there's a lot going on in building out that kind of social graph, and I think that's important for the layer of all of that money that went into VC. People think it's been nuked. It's not. Everyone's busy building stuff, right? And that stuff is being built on generally the consumer layer or the deep tech layer. Those two layers are very interesting. And Lex will know more about the deep tech layer, but the consumer layer, that's where the next breakthrough comes through, when we stop caring what bloody chain something's actually on, because we just want the digital asset or utility that we've got. And we, you know, everything becomes a lot smoother, and all of that's extracted away. Digital ID is another big one that I'm very excited about, that has to come. It's kind of urgent ahead of the US election with the amount of AI stuff. And then final one for me is I'm actually excited about regulation, because I'm a masochist, but we kind of need it.
The crypto market's volatility is why institutional investors step back. As per Rostin Benem, if the CFTC regulates crypto, the institutional investors will be reassured once again and gain the trust that had been lost. He believes that his agency's supervision can help Bitcoin double in value. With CFTC coming forward to regulate the crypto market and the chair being a crypto proponent, it appears that the United States will soon have a positive crypto regulation for good. On the other hand, even the Securities and Exchange Commission, SEC, has also applied to regulate the crypto sector. However, they have not gained much support. What do you think of Raoul Pal's positive outlook on cryptocurrencies and NFTs? Let us know what you think in the comment section. Don't forget to like the video, subscribe, and turn on notifications. Thanks for watching.